I've seen it all before. I just don't know when. Was it 98, 99, or 2000? Nick and I will discuss. Stay tuned.
Holy fucking shit, it's a dinosaur. Jesus Christ, what the fuck? Oh my fucking god, fucking dinosaurs. Holy shit, what the...
Welcome to all new viewers and everybody who has come back after our first very, very successful 3 shows. This is show number 4. And Nick actually left his villain lair to occupy his other villain lair with a bit of a nicer climate, as you can see in the background. I first thought, is that Zoom magic? No, it's somewhere in an undisclosed country where it's very nice and warm. That's why we are still having this lovely conversation. I'm going to put it out on Sunday, even though we're recording on a Saturday, but so much might not change overnight. Well, they could still come out with an agreement that the debt ceiling problem is no longer a problem. So it won't be on this video if that happens on Saturday evening. I don't think it will. Let's dive into it. And obviously the topic today will be artificial intelligence. Why did something happen? Well, everybody's talking about it at the moment. We have seen NVDA doing the magic thing, and Nick and I thought now is our chance to turn a negative into a positive. We both have gray hair. I have a bit more gray hair, even though he's older. And we have actually been in the screens in 2000 when we have seen a lot of weird things happening, especially in the technology sector. And we haven't been there for the first year. We already had a couple of rodeos by then behind us. So a lot of talking heads at the moment who make straight through analysis about who is it comparable to the dot-com boom we've seen in 2000. They haven't been around. Well, they have been around, but they were playing with toys somewhere in a garden or doing stuff. We haven't. We have been there. So let's talk about that. The scenario, obviously, Nick is the macro man. I want to ask him, do you still remember, Nick, what was the macro environment during the 2000s, 99, 98? What was the starting position? Which condition has the economy been in, the market in general? And let's find whether there are comparables while we talk about it. And as we've been asked to put some charts in, I will also have some charts in the background on interest rates, you name it, while we have the conversation. Nick, can you give me an idea? Because, well, obviously it's over 20 years ago. And my memory is a bit short. I can just remember the Porsche dealer being on the trading floor, selling them like hotcakes.
Well, you'll obviously remember the Russian crisis. You'll obviously remember the long-term capital crisis.
Yes.
And you remember the reaction from the Federal Reserve at the time. And save the system, save everything. And, if you like, that led to a little bit of speculation where people were buying just about everything to do with technology at that time. And, leverage upon leverage, companies were coming out and people were buying it, actually not even knowing what the companies did. So, it was a bit, it did get a bit silly, but in the silliness, there was a lot of sensible stuff going on as well in the background. So there were some excellent companies, growing and developing at the time. And that's something that we shouldn't forget, that in all of this speculation thing that's going on, actually there's a lot of good stuff that has been built up until now, that is being built. And AI, I mean, let's just face it, I studied AI as well at my university. 1982, my final year project in artificial intelligence was programming a backgammon game. So it has been around, and in that last 40 years, they have made some incredible headways. And normally I would say, well, this is just yet again another bit of speculation, but there is something real. And obviously ChatGPT has given everybody a little bit more to, how should we say, speculate about.
Well, I'm using it now all the time, and I think I would have completely used it if I would still be in school or university. Backward facing, absolutely fantastic. It writes you everything you want, brief summaries, you name it. The moment for preparation for this video, actually, I asked ChatGPT, show me the headlines of the internet bubble in 2000 and compare them to AI headlines we have today. Not exactly the same hype we had seen in 2000, but holy moly, there are some similarities in there. And I've asked that before all the rewrites of the whole AI story and NVIDIA story came. You've seen it now. The forecasts are on average about $500. It's the from all the big boys you see, grown-ass analysts are getting almost sentimental about artificial intelligence. It's amazing to see that. Yeah, they really can't believe what they're seeing there. And this is in the back of my mind when I thought, yeah, we've seen that before. We've seen that about the internet, and the internet was some awesome thing. I can still remember when some colleague of mine from the IT department came to my desk and said, we're installing something on your computer. And I said, what are you going to install? The internet, but it's only for a few at the moment. Seriously. Now we were using Bloomberg. That was our internet then. And something data stream and Reuters, but okay, we had the internet, and then you could communicate with some weirdos with weird opinions and see it, and it wasn't really of much use then. Obviously, the progression was huge, and what we have seen is, and that's where I made the analogy. You remember a little company called Enron?
Indeed.
Yep. For all our younger viewers, this was one of the biggest hype stories of the internet area, and then well, CEOs ended in jail for 15 years because they did some fraudulent stuff with the valuation of their stock and debt. And anyway, the story I was going on about, this was a very innovative company. They actually invented Netflix before Netflix was invented. They said, okay, people will start watching the stuff they rent at Blockbusters at the moment via the internet. They had the problem that the internet wasn't really quite there. You didn't have the bandwidth. That was, what was Bernie Ebbers' shop called? WorldCom?
WorldCom.
Another one of these firms that doesn't exist anymore with CEOs in jail. A different story. But the idea was genius, yeah? Having the internet and using it to push data around and get information, awesome. But the applications haven't been quite there yet in 2000. So the brilliant idea where Enron couldn't use it is now being very, very popularly used by Netflix. Yeah? And well, Netflix was, or Blockbuster was offered to buy Netflix, and they didn't want to have it at the time for cheapest chips. So in my head, yes, AI, fantastic. But every time I ask AI something sensible, like, is the market going up tomorrow or down? It can't give me an answer, or it's refusing to give me an answer, or it gives me a lecture first about how I'm a bloody racist for asking that question. So yes, I want to have AI, and I want to be able to talk to AI like they do it on Star Trek. You simply ask the computer to do an analysis for you and give you a likely outcome, but it's not quite there yet. It will eventually be there, and it will be much faster than the progression of the internet. I'm sure of that. Going back to our initial point, if NVIDIA is this magic company who makes all this possible, when do you want to buy it? Because I have a chart. I could actually try to put that on while we are talking about. I would really, really love to buy NVIDIA after they've corrected by 90%. Thorsten, what are you talking about? Yeah, well, where's my Amazon chart? That's a long-term Amazon chart here. I've put it to logarithmic. Nick, you can see it, yeah? Here we are, indeed. We are on the good 2000s. That's when all the hype, the fantasy happened, yeah? 98, 99. We went up, fantastic idea. Everybody on the trading floor was ordering books from Amazon. We were told off by our boss that the guys in the postal guys in-house had too much work schlepping this stuff back and forth. So yes, we saw it was going on. The market saw it as well. And then obviously it has been various stock splits and stuff. So at $4.50, $5 almost, it peaked out, and you could have bought it for something like 28 cents 2 years later. Yeah, this is actually where I want to buy NVIDIA or the equivalent after the hype has ebbed up. I don't know where we are at the moment. That's one of the discussions. Are we right here at 98? Or are we very close to the top with artificial intelligence already? Nick, what's your take?
Well, if you remember way back to our first video when we talked about valuation, and when I said, you know, when there's a lot of liquidity in the market, and actually there's a lot of liquidity plus there's a frenzy, and liquidity plus frenzy means, you know, don't short that stuff. you never know where the high is going to be, right? So valuation is irrelevant until suddenly it becomes irrelevant, until suddenly greed overtakes that fantasy that everyone's got in the stock. And, that is one of the most difficult things to say, well, where are we going to put a top on this thing? So rule number one, don't sell it. Rule number two is wait until you get some confirmation of a sell. And if you look back to your lovely chart here on Amazon, I mean, you had already that first little blip down in, before you then had another little higher, nice little double top for those traditional technical analysts. But again, you had such a long time and a chance to sell this stuff. So, there's no point trying to look at the left-hand side of that chart where this thing is going up like a rocket and saying, well, it's going to be this point and it's going to be that point. Rather, and that's the way that I, do this stuff is, when I'm not doing Elliott wave analysis, I'm doing trend and momentum. And the last time we spoke, momentum was dying, but trend was still strong. And when trend is not your friend, then leave it alone. And, right now, the trend is still going up until it doesn't. And when it doesn't, you'll see an opportunity. You may not get the high. You may not be able to sell this thing at 420 or whatever the high might be, or 520. But you will be selling this thing into weakness. And that's something you want to go for you rather than, trying to figure out right now, when there's fantasy in something like this, where are you going to pick that high? I mean, when Bitcoin started at very, very low numbers, where were you going to pick that high? And so, but there is something different, this time. Let's just say what's good about it right now, which we know about this fantasy is, I've just described it's been around for 40 years. There's been a lot of work done in that 40 years. And people like NVIDIA, who obviously they haven't been around for 40 years, but the time that they have, they've done an incredible amount of work, and people use their stuff. So you talked about the dot-com-bubble. In those days, I was actually running a fund, an internal fund for Dresdner, and it was to look at the fintechs of those days. We never called them fintechs, but the bottom line was it was very difficult to convince people to finance you. You had to sort of give them the fantasy, but also, they were not willing to just part with their money on something which they did not understand. And it took a long time. And then the same thing with Bitcoin. Bitcoin started with this fantasy, and everybody said, look what wonders it will do for the world. And then suddenly, the intermediaries, these centralized exchanges, screw things up. Did bad things, let's just put it that way. And this thing suddenly lost its momentum. The difference with AI is that I think everyone realizes what the potential is. Just that ChatGPT opened up, people's minds as to what is possible. And you've got, I checked the numbers just before we came on air, 100 million users, and there are 1.8 billion visits per month. Now, I'm sure a lot of that are guys saying and girls saying, please do my homework for me, and so on. But the productivity benefits of AI is absolutely phenomenal, and it is improving whilst we are talking, and there it is learning. And the benefits of this thing are not just scary on the one side, but for what it could do for the economy is absolutely phenomenal. And therefore that doesn't need convincing. And that's something that's happening already, today. People are using it, they're getting the benefit for this thing. So you say, okay, the story is there. All I need to make sure is that I'm not short at the wrong point. Dare I say?
Just pulled up the figure from NVIDIA, which is actually quite interesting. So we're here, 7.192 billion in total turnover, and their guidance said, and you remember our last conversation, I said, well, it's coiled like a spring at the moment. If they don't bring a fantastic guidance, they have a disaster, a bloodbath on their hand. And what did they do? They let it roll in by fairies and put sprinkles of chocolate on top and said, we're going to make 11 billion bucks in the next quarter. So they already have almost 1.5 months of data there. So you might want to trust them, that they see what order inflow is already coming. But where's it coming from? It only can come out of the data center business, right? Gaming, well, yeah, it's not really an improvement. Professional visualization, they already say it's going down. It necessarily has to. If the AI can do all that, sooner or later, you don't have to pay NVIDIA for doing it anymore. Autos, yes, self-driving cars, still a story, but not a huge basis effect in there. Others, and at the moment we are 7.192. 11 billion turnover is a biggie. And whoever I talk to is the question, so really, is it just coming out of selling is it H100 chip? The super chip to Microsoft and all the other players, because NVIDIA is the only one who can deliver this in size to them at the moment. And what's happened after the next quarter?
Well, A, I'm not a tech analyst, and B, I'm not a NVIDIA analyst, but let's just look at some other pluses or minuses. Right now, firstly, there is this geopolitical, tit for tat between the US and China. Now, depending on what happens with this thing and how this thing progresses, if Taiwan semiconductors are, somewhat restricted, somehow this thing could flow back some benefit towards NVIDIA. So, that's the first point. There is some benefit that potentially could fall NVIDIA's way with Taiwan semiconductors and this geopolitical thing. On the negative side, and as I say, I'm definitely not tech savvy enough here to say whether this is confirming or denying the story of the NVIDIA forecast, but the Taiwan Semiconductor CEO's downgraded his forecasts for the year.
Yeah, that makes me suspicious as well.
And I just don't see how the two things work together. And I don't know who is right and I don't know who is wrong. And I don't know if they're meant to be both right or both wrong, frankly. But that's something worth following up.
Yeah, because what went through my mind in this whole thing, I thought, okay, if you give a fantastic guidance for the second quarter, you already have April in and you already have half of May in the bag. But then again, if you're the CEO and you know how coiled up the situation is at the moment, and that this 30% up might as well been 30% down in a second if you would have come out with the wrong figures, you can't report figures that aren't there when you show your actual revenues and your actual profits. However, you can always go back on a guidance and say, guys, yes, we were very optimistic, but the situation was very different when we gave the guidance. Now that we had a crash in the market because, I don't know, the US defaulted, we might not come in at this level. So it's actually, well, easier to correct the guidance. Yes, it will piss people off. It will piss the market off. But what you're going to do in this case? So yes, I actually want to buy NVIDIA when they have corrected by 80%. I think it's fantastic. Then I want to have a portfolio of 4 AI companies, put 10 grand in each of them and let them lie for 20 years. Play the Amazon effect. One of them will make it and will have fantastic performance. Great investment portfolio. But this situation at the moment is, yes, it looks too good to be true. The people are fantastic. And you know already, I started a little, how do you call it, a probing attack at 300, was kicked out of my short, nothing happened. Then my next point would have been to say, you know what, if we are creeping up to the all-time high, I might get positioned. Well, that was taken out in an overnight move with a huge gap. So at the moment I say, yeah, well, let's see how that works out over the next couple of days. Yeah, market, this volatility we have in there has first to calm down a little bit to see what is it going further north, or are we now seeing a volatile trading range in there? And I also checked the short interest. There was surprisingly little short interest in NVIDIA on the last published figures, which I would not have expected in that case. Volume compared to the heydays, and let me put on the chart again, right, with the volume profile, volume in there. You see the big hype here. Oh yeah, 2000s, huge volume. Big hype here, huge volume again. Then this uptrend started with a huge pickup in volume, and now we're actually stable, almost, I don't want to call it subdued, but calm, running into this huge gap. It's a monthly chart, obviously, on the upside. So yes, if the market would have gone slowly to the new all-time high, I might have done a second probing attack here. At the moment, I want to wait. I want to have confirmation about this 11 billion turnover for the second quarter. What goes through my mind is simply the fact, if they have this unique product nobody else has, and that makes them an absolute killing in a free market economy, how long does it take before other competitors move into this field, destroy margins, increase competition, and you can't expect these growth rates? One of the most ridiculous sentences I've heard after this 30% gap upstairs was on CNBC, when one of the guys said, well, today actually it looks cheaper than yesterday because the forecasts are so fantastic that on a forward PE basis, the stock is cheaper today than it was yesterday. And I looked at it and thought, well, surely it doesn't look cheaper now. But it's the situation that reminded me of an interview I heard a long time ago with Stanley Druckenmiller, when they asked him, you were one of the last, or you were one of the guys who actually bought at the high after you had been short before. And then obviously you made, you took considerable losses. What have you learned from this? And he said, I've learned nothing. And the reporter was a bit like, what do you mean you haven't learned? You didn't learn anything. He said, I knew it was rubbish what I'm doing. My investors forced me to get into all these hot stocks. I had no choice. Otherwise, I would have been the back holder in the reverse way, who was not invested. So yes, I bought at the high, and that is going through my mind at the moment. Is that something we can see here? Is it already 2000, or do we really have to see the pets.ie and all these stocks you and I remember far too well coming out of the cupboard, and companies and young billionaires making a killing in the market by issuing now companies or associating companies with artificial intelligence? We all agree it's a great thing. It will change the world again. After 20 years of internet, now we have this. But the current situation, so that's why I wanted to ask you, and I put another chart on with the macro side. I thought, okay, maybe it makes sense to look at interest rates. I have the 10 years here on the screen. And let's go a little bit further back. Let's take the lock out. 10 years ago, or in 2000, interest rates, we could almost say we're now running into the levels we have seen on average. Yeah, obviously they have been much higher. The 10 years in April 2000 at 6.5%. But let me go into the 2 years. That makes it more obvious in here. So in 2000, what did we see? Or 1998, we've seen a steep increase in the 2 years. Then the disaster seemed to happen. Obviously, it came down again. And what are we seeing at the moment? We had this massive increase. We're at 4.5% right now. Where have we been in 98? 4.5%. Went up to 6.47 after an increase, and then the bloodbath happened. In a macro scenario, we didn't have inflation then, did we? Inflation was still going down. It was purely a function of what interest rates are doing. It was not, we have to fight inflation doing this.
No, but I mean, just coming back to, is this a good company or is this not a good company? Yes, it is a good company. Can a competitor come into this space, overnight and suddenly, take share out of NVIDIA? I don't believe so. I mean, this is one of these companies that have had years of R&D. Their business model is very well protected. If the competitor wanted to come in, they would have done so a long time ago. You need billions to invest in, processes like this. And NVIDIA have something quite unique. The statement from the CNBC about it's cheaper today than it was yesterday, theoretically, that's true. I mean, the argument is logical. But as you say, you want to see the evidence through, through the sales, because right now, the company is a great company with a very high valuation, and a great company with a very high valuation is not an investment potential. You need to see that readjusted before you want to buy stuff, and that's where I think that's it in the end of the day, and that just shows you that it's, as I say, very typical to things like Bitcoin, very typical to what we saw in the year 2000. You do not know as a speculator where the frenzy ends and where the fantasy ends. And it's only at the point where greed takes over and suddenly you get this, everybody's in at the top, and then suddenly prices start to move down. It is a very big focal thing right now, AI, and but the market is a lot bigger than just NVIDIA.
Nick, if I approach that from a top-down level, and now I have the 10 versus 2 year spread here on my screen, obviously it's a very good predictor. We've seen here going inverse at the beginning of 2000, and that was pending doom. So a company like NVIDIA has to sell their products. They can only sell their products if their customers are optimistic in taking these huge investments in there. That is what the whole sales pitch for me is dependent on. If we say it has been a fantastic predictor of the financial crisis, it even in a weird way predicted Corona in July 19 when it inverted for a brief period of time. And now we have obviously this pickle here, which if you take the magnitude we've just seen here, would still forecast a huge worldwide recession. By the way, Germany, we are now in a recession officially. We have 2 negative quarters in a row. With the DAX at an all-time high, with a communist which is more exposed on the socialist side of business, in a European framework which is more on the socialist side of conducting business, it stops making sense. Aren't these the harbingers of doom we are seeing? And if that collapses and we see this global recession, then NVIDIA can be as good as a company as they like with the most fantastic product in the world, but everything is then built on a sand castle.
Okay, I'm going to remind you about our third video, so the last one we did. You spoke about oil, you spoke about copper, you said, look, these are the harbingers. Oil is going down, therefore copper is going down, therefore, I mentioned also the Chinese currency, the Chinese economy is going down, therefore, and leading indicators I think we talked about, and now you bring up the yield curve, and I'd say, well, the yield curve just shows me how stupid the Fed are, because the problem was not just the bit we've got now, but the bit that came before that. Where they flooded the world with flooded the economies with so much money and created all of this inflation. So, and you must also understand that the yield curve now is collateral is just used so differently by banks these days. It's not impossible to say that the long end is somewhat going to be operating not just on basis of expectations of let's just say interest rates in the future, but rather the demand for collateral, and therefore you may get misalignments in the yield curve, and maybe that doesn't tell you anything at all. And I come back to the conclusion I gave before, which was in an environment where liquidity is in the system and it's in surplus, if you like, asset prices go up. So DAX has gone up, but we're in a recession. I mean, in the old days, you'd have just said, sell the damn thing. You have this yield curve thing, which everyone on Twitter has been, printing since every basis point we went through in the minus. Yeah. And how does that trade look today? The leading indicator thing, the copper thing, the oil thing. So sooner or later they will count, right? And then the question comes, either liquidity is going to, sort of grease the wheel of the economy, and then the business cycle is going to play catch up, and actually, we're moving into a better economic environment, as opposed to sort of the history where we've been, a fairly weak outlook and a weaker economic environment. Or is it just simply that the liquidity is going to disappear one day, and then you get that, per video one, that wily coyote, suddenly you're off the cliff, and you look at your valuation, you say, oh God, I own NVIDIA at PE of whatever that is today, and then this thing falls to $100, and then you can get your cheap stocks. So the jury is out on that right now, but what is it that actually drives market prices? a lot of it is not anything that, let's just say, the economics 101 has been useful for, put it this way. And that's why a lot of macro guys are not doing so good.
Well, apart from you, I'm obviously my biggest critic. And I was actually thinking about, okay, what could be the scenario where I'm totally wrong? And what always pops up back in the head of my mind is soft lending. Are they actually really constructing a Goldilocks scenario on the equity market, or this sector knows better? Where I'm coming from, when Germany slipped into the recession officially, what went through my mind said, okay, it's again the cleanest shirt in the dirty hamper. If you are a company, and we've seen many of these examples now in Germany, I'm pretty sure there are plenty afoot in France, in Italy, in Spain, you name it, who actually close shop down in the European Union and shift their business to the United States. There are a couple of things. Obviously, energy prices are ridiculously high in Germany and make it impossible for the chemical industry or the heavy industry to work properly. Then you have employment costs. And if you are a German employer, first of all, the administration is madness. The letters I got at the moment, again, Nick, you wouldn't believe it. They are changing the so-called insurance for when you're decrepit. Yeah? And it's, you get a discount for your employees if they have more than 2 kids. So the state now wants to have a birth certificate to prove that they have 2 kids who are below the age of 25. And then it doesn't increase by 0.4, but gets deducted by 0.25 percentage points per each person after you've provided these figures. So it makes you want to fire everybody you employ just because you don't want to deal with that crap. Having said that, if you're an employer and you pay in Germany $80 an hour on a full cost basis for somebody who works in your chemical factory, and you get the same education level in the United States where they're paying $40, you can easily say, yeah, fine, I get the best, finest workers in the United States I can get. I pay them $10, $20 more, and I'm still cheaper than what I'm having in Germany. So stepping back and saying, how could they construct a soft landing is by simply being the better capitalists.
Well, firstly, there's a couple of things here. The German politics, I have to be careful because I do live in Germany, but, it is a mess, and it is not, in my view, business friendly, and it's very confusing, and the energy policy is confusing. And this is not a good environment for, how should we say, entrepreneurs to build with comfort, put it this way.
Yeah.
So, they'll have to go somewhere else. But on the same score, America is also, let's just say, not doing the best, smartest foreign policy. And that's not necessarily creating the right environment for, people, for investors to feel comfortable to put money in America. So, even though I talk about, we're likely to see a new high in the S&P, I actually don't like the American stock market that much. I still prefer overseas markets. I still prefer Asian markets. China, not right now. Hong Kong, not right now, but very soon. But Japan and some of these other regional markets in Asia, Latin America, is interesting. And perhaps this is the time where these developed markets just suddenly lose out, because perhaps the G7 is not the place to stick your money in the future, and perhaps it is going to be somewhere else, and perhaps the BRICS do make something of it. But all of these perhapses don't help us sort of invest, and they don't help us put money to work. So we have to, be patient on this thing. And this idea about the Federal Reserve engineering a soft landing, they're not that they don't know what they're doing. They've turned the dial, right? And they're saying, oh God, I hope nothing really blows up. But there's no engineering about it.
Didn't Alan Greenspan manage to do that in '98 or something like that?
Well, I think, if you look back and read a lot of people who are much more closer to the situation of being a Fed watcher at the time, he claimed a lot of credit for things that were happening, let's just say external events like China bringing in cheap labor, effectively reducing inflation. They don't need to do anything. It's all happening. It's the same thing with this AI, and maybe AI is also, if it's the big productivity thing, expecting an improvement in productivity. The S&P can quite easily be 5,000 tomorrow, and suddenly all your valuation metrics have gone out the window, because you say, oh shit, well, now it all makes sense. Now I get it. So, I try not to sort of focus on stuff that's going to get me into trouble, and try and focus on the things that that do look like they are, how should we say, not explaining prices, but at least have a much better, closer correlation with price action in that sort of shorter term time horizon. The longer term time horizon, of course, we still don't know how the business cycle is going to respond to all of this liquidity that's coming in. We still don't know if China is going to drag everyone down or pull everyone out. I mean, that's also a big issue.
Now, our models at the moment, the statistical models, indicate not a crash. It's not imminent, at least not what our big indicators tell us, at least on a yearly basis. Yeah. 252 days, but there's also not a lot of upside left in neither of these things we have out there. So could we see, I've heard the word before the first time 2 weeks ago, could we go into a lost decade?
You mean a la
I'm
Japan?
like Japan, yeah? We have volatility and we see markets going up and down, but actually they're not going anywhere.
Well, I mean, okay, so there's a lot of forecasting of the next 10-year returns based on the equity excess equity risk premium, the CAPE excess spread. So, and people say, well, okay, well, that's, the real number is about, you're going to earn, kind of nothing for the next 10 years. Well, what if you earn actually all of it in the next 3 years and nothing in the next 7 years? And you don't know that in any of these numbers. So that's the first thing. The second thing about the lost decade, they can't afford it, right? They've got debt to GDP at such a big number. If stocks, Greenspan said, I can't remember when, all right, he made a comment, it was quoted by a number of researchers who where I got the quote from. And he said, if the stock market just stays stable, does not rise, just stays stable, then we have a big problem. So it is in the interest of everybody to get the stock market higher. It is in the interest of governments to, how should we say, dare I say it, is financial repression. It's in the interest of them to inflate their debt away. Because this, the example of the debt ceiling, if you think it's a problem now when the debt to GDP is where it is right now, and then you add on top of that a recession and lower tax receipts, and there are already lower tax receipts this year, then the problem next year and the fights next year get even bigger and bigger and bigger. So there is only realistically, two solutions, I would say. I mean, the first solution is financial repression. And the other one is to bloody hope that the good parts of the artificial intelligence improve productivity.
So the other word is that a stagflation scenario? They have to have inflation to inflate the debt away, but we don't see this huge progression if AI doesn't kick in. We'll see, which is very good for option sellers. Yeah, I'm not complaining about.
But if you get stagflation by definition means growth is doing that, and that's down. Again, where does the tax revenue come from? And if you don't get tax revenue, how do they deal with the budget deficit, which is ever on the increase? And I urge everybody who is listening to this video to go to the Congressional Budget Office and download their latest forecasts. They were updated in the middle of May, and the initial forecasts were based in February, and just see the charts there. They are exponential. What they expect, as the government, okay, they expect their debt to be now, and it's every year, it just gets bigger and bigger and bigger. Now you add on top of that, higher for longer, the Federal Reserve engineering, higher for longer. All they're doing is they're increasing their deficit, and there are many people who have looked at this thing. I can name a few names, Luke Groman, and there will be some names that come to me, but who basically say, well, actually, the interest that they are paying on their debt actually adds to the inflation. So if you think that the interest you're paying is as much as your defense bill was last year, that money is going into the system. What do you think you were doing 2 years ago that caused inflation that you still don't understand, dear central bankers? You're just doing it again. You just haven't figured it out. And these are the kind of the bigger problems. And going back in that kind of environment, given that we say that they can't afford to see things, go kaput in that environment, there are many things that are going to look really loopy in terms of valuations. And I guess the trick is to focus on buying the stuff that's going to do well in that environment and wait for the time to sell it when it's not going to do well. And what's going to do well? As I say, there are sort of Japan is doing really well. The yen's going to be doing really well. I'm pretty sure of that. It's not happening now. Maybe sort of in the next few months, you see a turn in the yen. I mean, there are plenty of things to go and buy. Energy actually looks like it's turning. I don't know if it's a sort of a long-term thing, but in the short term, it looks like it's, perhaps found a bottom, at least for a few months.
Well, statistically, gas is actually crying for a rally. At least our statistics tell us that what we can see there is absolutely impossible. But the moment I was running this analysis and already had almost my finger on the trigger, what happened? Another dive down. Yeah, nice correction in there. So I thought, okay, fine, gives me another opportunity to start building up a position, because all the models say it should go higher, but it doesn't. Oil should go higher, but it doesn't. Even the biggest oil bulls out there at the moment are almost, well, which might be a good sign, but are almost crawling back and say, oh, explain that to me. Why is that as it is? Every economic data point, every good reason, with the whole changing carbon neutral, but we still need it. They have reduced capacity. Why are the energy prices going down?
So I think we might have covered part of that in a previous video, but obviously oil and copper is still betting on that sort of global recession, China not growing, Fed creating a lot of damage, Russians selling oil, strategic petroleum reserve just going to get trashing the price of oil to harm Russia's war effort. So there are lots of reasons why the oil is coming down, but at one point, these factors will meet the point where there's not been a lot of investment in oil over the last few years. And the real question comes is, well, when does the rally start? That may well be many years to come. We honestly don't know. And that's why the time horizons of the bets that you take probably are going to be a lot shorter than they used to be in the past.
Now, if I look at markets today, obviously I'm looking mostly at equity markets. Equity market is stabilized at the moment at this still at elevated levels because of the AI shenanigans. You have the big mega corps which are keeping it up. If you look at on an equally weight basis, you don't see this huge uptrend there. So that is stable. Then we have a macro environment where we actually don't come really to a conclusion. Is that Goldilocks we're entering again, or are we still in the inflation scenario? I can't tell you at the moment.
I think I sort of referred to it as being Goldilocks at one of our previous videos. That, for me, it looks that kind of environment. But I mean, it's true what you say, and this is a real bad thing about the state of the markets today, is that where is the growth in stock prices coming from? It's not a broad sort of participation of stocks. There's a very narrow focus stocks. But if you have a look back this year, what's actually rallied? Tech has rallied, consumer discretionary has rallied, communications have rallied, and just about everything else has come down. So what are the other things? Well, it's energy, financials. We've had all of those shenanigans in the past. And if we say that energy is at the point where it might just sort of pick up, I mean, let's see, the momentum is there. The trend is not, but the momentum looks okay at the moment. It could well be that we start to get a pickup in one or two of these other sectors to support. But I grant you that the rally itself, take NVIDIA out of the equation. Yeah. The rally itself is totally bloody unhealthy with how few stocks have participated in this thing. But if you can get some of these other sort of poor performers, some energy stocks, some of these financials who they have been sort of overly beaten up, maybe they recover for a bit. It buys you a few months. It doesn't buy you forever because, as I say, in this game, you really need to look just a very short time horizon in front of you. I don't think you can play these long-term bets anymore.
And that's where statistics are also tricky, because the other model, which is blinking, screaming a buy at you, is regional banks at the moment. I wouldn't touch them with a barge pen at the moment, right? That's I worked at Bear Stearns when we went down the toilet. So this is a 1-2 move. We've seen one now, then there's a period of subdued quietness somewhere in between, and then the market wants to see again the second test. Is there something or is there nothing? And I think we haven't seen that yet, to actually say, okay, it would be for me a sector to expose myself to. I'm with you on the energy side, on the gas side, because I think there are also market economics simply in there. Everybody seems to be short of the big traders there. The stories didn't work out. The biggest bulls are turning bearish. But the question is, do I have to force myself at the moment to put on a trade or not?
Well, as I say, there are many other stocks apart from the video that you can have a look at. But on the regional bank stuff, I wouldn't touch them with a barge pole. You get some stupid Fed behavior where they continue to raise rates, money continues to pull out these things. This is not healthy environment for banks nor their business models, and for that reason, frankly, I'm not sure. As I say, the world is much bigger than that. I think it was Todd Gordon, I have to give him credit for this. He did an analysis. He said that the regional banks themselves, the market cap is about 350 billion. NVIDIA went up 200 billion the other day. This tiny, we're all focused on these little mushroom clouds that develop in the system somewhere, and we blow them up ourselves and say, God, look at that, system's going to fall apart. The other point that was made was earnings. Earnings, they did forecast that they would go down this quarter.
Yeah.
Actually, they didn't go down as much as they had thought. And it's quite possible that the earnings revisions that you're now going to see are more to the upside. And again, if that starts to happen, it changes this whole valuation metrics. I say, yesterday it looked pretty shitty, and today it looks actually not so bad. It's like that guy on CNBC who quoted, he's got a point. If they really do 11 million of revenue, suddenly it's a bit cheaper.
Yeah, absolutely. No, I'm with you. It's just this. Oh, by the way, one of our viewers put in the comments, actually, obviously he liked the show. How couldn't he? And then he asked, couldn't we give weekly indications, especially about which sector we're in? And I thought, no, you can't. You can't really put that on a weekly basis, not the way you and I trade. But what I actually like is the idea, trade of the day. Sorry, I'm getting out of focus again. Trade of the day for me at the moment, if you would ask me, I was looking into volatilities again, and NVIDIA volatility is still at 45. It always seems to be at 45 when I have a look at it. Yeah? We have now seen this move. I think it was 7 standard deviations in one day, which was absolutely bizarre. Yeah? So that's why I always cut my losses off at 3 if I do anything in the option market. But now, again, I'm actually tempted simply as an option writer to say, okay, I still can get good premium. Let's go out 1 standard deviation in NVIDIA, just to make that point, and say, let's sell some options while cover your upside. Again, take in some premium and see another probing, but not a speculation, massively on the downside. Simply say, okay, can we go up another 10, 15% right here from this level? Or is now first a period where the market has to readjust? You know it and I know it. After numbers like that come in, what happens with the big institutions? They get their analysts in, they analyze stuff, they talk about stuff. Then there is an investment committee. Shall we now at these elevated levels buy NVIDIA? So these decisions will come in over the next 10 days, how the exposure will be. Or are they saying, you know what, we're actually quite fine. We're already overweight anyway through this massive move. Will there be material coming out? So the limit to the upside, tactically, and it's a tactical brief here, I think could be limited now. Again, a nice probing attack, sell some calls, 1 standard deviation on top of it, hedge your risk off that you don't lose too much if it blows up another $100. But at least you have something in the market which resembles something of sense. And if the confirmation comes in, yes, and we have 11 billion this quarter and we have 20 billion next quarter, well, fine. There'll be another day to fight. But that would be for our viewer who wanted to have some, what could you trade if you had to? And if you really, really have to, that is something I might be willing to put on, even though I first want to see how this whole thing plays out, and I want to get research into my hands where they're explaining to me exactly how this money comes into the door with NVIDIA, what is going to happen in the following on quarters. And there are still other chip makers in the market. Have they all stopped producing chips? Are they not investing in artificial intelligence anymore? You know, the half-life, the cycle of these super chips tends to get shorter by the minute as well.
So it's good that you took note of the comment I made about sort of focusing on some other names when you came up with the video at the end of all of that. Okay, so for me on the radar, I think is the yen. Obviously, the dollar has got a bit of a support behind it, so may not be a today trade, but I quite like the idea of the yen. And eventually, I think they will raise rates in Japan. We'll see what that does. I think the economy there is much stronger than it's ever been, and therefore I quite like that area. And also, I would have on my radar XLE. So I want to know if this thing with energy is just a bit of momentum and then it goes back down again, or if there is something more substantial behind it.
Great. Good. So we've answered the question. I stuck deliberately with NVIDIA. Obviously, was talk of the town today. We look back into the 2000s, and yes, the signs of a complete overhype are not there yet. These times around 2000 were extremely unique, and we haven't seen all the crap in the market yet. However, we are at high elevated levels. And maybe one last chart, because I looked out one of the stocks I love to short at the time, and obviously I didn't make any money shorting it, but I was much younger. That's my excuse at the time. And wait, I'm trying to share this. A fantastic little stock called Infineon. You've heard about it. They came into the stock market, well, at the tail end of the super bubble, and I distinctly remember my mother calling me, asking me whether she should sign up to become an Infineon investor. And I said, well, yeah, surely, German chip maker, good chip maker. We had this enormous bull run. I think, obviously, there was a stock split in the meantime again. I started shorting it, I think, here at these levels somehow. I was taken out.
On the way up.
Yeah. Because I couldn't believe it, but that taught me actually the lesson. Yes, markets can stay more stupid than you can, or your risk management allows you to be in there. And that is the point actually where I would love to invest in great AI stocks after, you see here the correction, after they've lost 92%. I don't think they're going to do that tomorrow, but
you see how much patience you need even after you invest after a big sell-off like that. The whole sector is beaten up, and how many years has it taken to this thing to look remotely respectable? It did nothing for 10 years.
We're still here half the price from the peaks we've seen in 2000 in Infineon. So
that's if you think about Japan has had 40 years of we have not seen a new high in the Nikkei, and I believe we're going to see a new high in the Nikkei. So I'm sure that's what that chart looks like as well.
But then we have seen actually in Japan, all the signs for a huge hype were there at the time, even we were younger then to focus on it. And at the beginning, I said we had, and I'm not making this up, we had the Porsche dealer on the trading floor flocking product to traders. I haven't seen that nowadays in the market. It's far more civilized. We have seen all these companies. We have seen retail in there. Obviously now, NVIDIA, one other point people focus on, but we haven't seen the super hype yet. However, the market, in my opinion, is highly valuated if we see a recession coming in. So I'm positioned for that. I hope I will recognize when we get into a hype, when everybody says, yeah, we are Goldilocks now, and they had a soft landing, they constructed it, they managed to do that. There's peace in the world again, everything is fine. Then I want to see companies coming out with toilet paper AI, making their public offering being worth 20 billion on the first day. I think then you have the final stage of this overcooked hype in there. In the meantime, sell some options with risk reduction that will bring you steady income, and purely by statistics. I'm right 67, 68% of the time. One standard deviation. Works for me.
Very good.
Nic, I wish you a most wonderful day in the background. I'm still jealous. I still think you have cheated with Zoom and it's some video behind you. Fantastic.
Indeed.
So
That's the advantage of AI.
We are not really shorter today. I think we're on 55 minutes, but
yes, sorry about that.
The video was worth having an additional look into it, especially what's going on. And I'm looking forward to speak to you. Where are you next week? And your villain layer?
I'm actually still here. It's probably my last few days next week, so we'll still be. I'll find another corner.
Excellent, Nic. Thank you very much for your time in your holidays. Much appreciated. And I speak to you latest next week.
See you, Thorsten.
Bye bye.